Good morning and welcome to the Flexible Space Association's latest in the series of Workspace Wisdom webinars. I'm Jane Sartin, I'm the Executive Director of Flexa, and this morning we have with us Hilary Witts, Head of Operations in the Ratings team at Flexa member Colliers, and she is, not surprisingly, going to talk to us about business rates. So as we go through, do add any questions you would like to be picked up at the end into the chat box. And as I say, we'll pick them up once Hilary has gone through the presentation. But for now, I will hand over to Hilary and put up her presentation to take through.
Thank you, Jane. Good morning, everybody. Well, I'm going to hopefully simplify what a lot of people see as a very complicated subject. I'm also going to try and put a little bit of life into it and try to relate it to your individual situations. So, as Jane said, if you've got any questions, please let us know and we can run through at the end. I'm quite happy to take individual questions about individual scenarios or more general ones. I'm presuming that I'm talking to people who've got a range of knowledge on business rates. Some people will have come across the situation before and have experience in dealing with them. For some people, it'll be a relatively fresh subject. So please excuse me if I make things a little bit basic. I'm just going to explain a little bit more about how business rates, it works in the different countries, and then we can make it a bit more specific from there. So what is a rateable value? Basically, a rateable value is what a willing landlord and a willing tenant would agree to pay on a specific date. So it's a rental value of a property on a specific date. Now, the current rating list started on the 1st of April 2017. So all properties were valued 2 years prior to that, so that we could make sure that there's enough time for HMRC to get all the information together and to kick off the start of the rating list. The reason for having a standard date for everybody to have the properties valued on the same date, which was the 1st of April 2015, is so that there was a benchmark, so there could be a comparison. So unlike council tax, where you're appealing a band, with a rateable value, you're appealing a specific value. And we do that by looking at comparables of what was happening in the market at that time. So for the current list, we're looking at values as at the 1st of April 2015 to see what was going on in the market at that time. The next rating list, let's start with England, is on the 1st of April 2023. Now, actually, that is the same as the other countries, but in England, the valuation date is the 1st of April 2021. Everybody will be aware that that was a very difficult period, right in the middle of a lockdown, right in the middle of the pandemic, really a massive dearth of rental information. There was no transactions going on, no information. So therefore, it makes us very, very nervous about how HMRC are going to put the valuations together at that date. And for that reason, we think that they are not going to be right in how they value them. So we're spending a lot of time at the moment researching the market, getting transactions for that date, getting information together so that we can tackle the draft rating list when it comes out in England, basically, which is in December this year. So we can have a look at it and we can decide which are right, which are wrong, and what pieces do we need to put in place. Now, I've said there, what is anything different in Scotland or Wales? Yes, it is. Scotland have been very sensible, and they've actually made their valuation date the 1st of April 2022. When the market was more lively, there were more transactions going on, but it had also settled a little bit after the pandemic, as we know, coming up to it now. So there should be more transactions for them to be able to get the assessments correct. That's what we hope. There are differences in the appeal systems for the different countries, which I'll talk about in a bit more detail. But in England, we have the dreaded check challenge appeal system. That's a system where the ratepayer has to register on a government portal, providing quite a lot of personal information, passport details, national insurance details, information which HMRC promises they don't hold on to, but a lot of people are not that comfortable providing. Once the records are set up on the HMRC portal, we can then use that, or ratepayers can use that to submit checks, to check the floor areas and the factual details are correct, and then a challenge against the value. That process can take around 2.5 years to deal with from start to finish, which we know is absolutely shocking. So from when you set it up and you claim the property, submit a check, to when you get a reduction could be 2.5 years. Fortunately, Wales has not got this system, although there are rumours that they may be joining this system from April 2023. And Scotland also do not have this system, but again, they are changing all their processes for April 2023, which I'll talk about in a bit more detail. Rates are calculated by using the rateable value times by a poundage multiplier. At the moment, it's around 51.2 pence in the pound. So for every pound that you have in rateable value, you pay a multiplier of 51.2% against it. So it is a complicated process. There are other multipliers involved in it, and quite frequently billing authorities get the bills wrong. So it's always worth doing research, making sure that the bills are made up correctly. A few tips really for the serviced office market. So first of all, we would say when it comes to doing rating appeals, regardless of which country we're talking about, make sure that the properties are inspected and assessed for opportunities. We would advise that if you've got a rating advisor that you do this. If not, that you have a look at it yourselves. Make sure that the actual breakdown of the assessments are correct. And this would definitely need ongoing liaison with the centre manager, who can give information about any changes, any vacancies, any lettings. Making sure that the centre manager is up to date with everything that's going on is absolutely key. And just to bear in mind that rateable values reductions would run from either the 1st of April 2017 in the current rating list, or your date of acquisition if it was later than that date, through to the 31st of March 2023. And just to point out that an initial review should consist of, first of all, opportunities where there should be splits or mergers, situations where the values are incorrect, but also speaking to auditors to make sure that historic and current bills are made up correctly. So there's a few angles for you to have a look at there. So the valuation of serviced office space, this is something that we get asked very frequently. So first of all, somebody asked a question about how co-working space is assessed. So in a standard service office building, you will have suites, meeting rooms, corridors, and maybe some common areas. The common areas will be assessed usually as one. The office suites will be assessed individually. The corridors should not be assessed. However, co-working space, where the occupiers have a lot more flexibility, they can come and go as they please, they might have it on a part-time license agreement, they're assessed as a whole as one. So if you have a bank of desks which are classed as co-working space, then they would be assessed as one entire bank of desks. So there might be an opportunity to reduce the rateable value, but if you do, it would be on the value as a whole as opposed to an individual desk. Obviously, I've mentioned that appeals can take 2 to 3 years to come to fruition, and I've mentioned that no value is attributed to corridor space or reception area. Really depends on the situation with those. And there is a value attributed to meeting rooms and shared facilities such as cafes. We do have a situation where some of our clients have cafes that are open for external people to come in and use them. They are very much assessed. Deletion is another appeals angle which is important to make everybody aware of. So basically, it's deleting the hereditament, as we call it, the rating assessment from the rating list, depending on the situation. So if you are doing refurbishments, or if you're knocking the space around, maybe doing splits and mergers, if this space is taken back to a shell, which I appreciate it's not always taken back to a shell, but it depends on the situation. So if you're doing a refurbishment, doing splits and mergers, take it back to a shell, it is possible to get it removed from the rating list during the period of the works. Has to be from a specific given date, and it's incredibly helpful to have either a schedule of works, photographs, or some information to give to the valuation office agency to say, these are the works that are going on, these are the dates. But have to use specific legislation. So if you want any more advice about that, please do give us a shout, because we can provide information for you on that. Scottish rating system. A few people again have asked questions about this. Scottish system is different. I think from the start of the current rating list in April 2017, from memory, there was a cut-off date of the 30th of September 2017 for all appeals to be submitted. After that date, no further appeals could be submitted unless it's a newly acquired property, so you've got a new interest in the property, or there have been significant changes to the property to create what's called a trigger to be able to submit an appeal. Next revaluation is in 2023. Fundamental changes are on the way to the way appeals are handled. So, for example, obviously in England, we have the check, challenge, appeal process. You submit the check to check the facts, and then the challenge is submitted, which gives all the evidence on behalf of the ratepayer to make sure that the assessment can be correct. In Scotland, they're doing the same thing, but without the check process. So it's going to be even more difficult. You can only submit a proposal, which we in England call a challenge. All your information has to be given up front. All of the evidence has to be in there. There can be no additional evidence put in due course. The assessors are very much defending the value in the list, and all the appeals have to be submitted by the end of July in the next list. So the end of July 2023. After that date, we're expecting the same rules will apply as apply at the moment. This is why it's really key to start thinking about the next rating list for Scotland particularly, and whether steps need to be taken to take advice or get processes in place so that you're all geared up for it. The draft list in Scotland is coming out at the end of November, a month earlier than England. Gives everybody a bit of time, but not a lot of time, to have a look at the assessment and say, is it right? If it's not right, let's start to pull together the comparables and information for the proposal. We're expecting it to be a very, very complicated and time-limited process. One more thing I wanted to mention on this slide was about assessor information notices. Now, again, I don't know whether this is something that you've received. A lot of our clients have. In England, you will receive what's called a valuation office form of return. Asks for quite a lot of information about the rent that's being paid, the terms of the lease, whether anybody's in occupation, that sort of detail. The assessor's information notice has even more requests for detail, and they have very, very strict penalties. If you don't return it in a specific period of time, then you start to rack up the costs, and they can be absolutely enormous. So again, I would say if anybody's received any assessor information notices, please try and complete them as soon as you can. One more thing to point out there is to remember that really the information that they should be requesting is not license information. It should be information based on the head lease. So how much you are paying as a serviced office operator to the landlord. If they are asking information about licenses, it should not be relevant to this process, because ultimately the license can include certain services which are not part of a standard landlord and tenant situation. So if they're asking for more information, it's worth picking up the phone to them and saying, can I have a chat with you? This is my understanding. What information do you need from me? Again, if you need any more information on that, feel free to ask the question. A little bit of information about the Northern Irish rating system. Again, a very different situation, really. So the current rating list started in 2020. The next one is in the 1st of April 2023, based on values in October 2021, just to make it more difficult and make it more complicated, which it is every time. Every country is a little bit different. They have what's called the LPS over there, which set the values, and the value can be, again, appealed. If you don't agree with the value that the district valuer puts on it, then you can appeal it to the Lands Tribunal. Again, different situation in relation to different types of appeals, so worth getting some advice as to whether or not appeal would be relevant in Northern Ireland. Same goes for Scotland. All different rules to different types of appeals, so again, worth getting some advice on that if you think there are any angles. So reliefs and exemptions by country. This is quite a complicated subject, so I'm going to try and keep it relatively brief. I'm happy to circulate the presentation afterwards. And again, if anybody's got any questions, then please do give me a shout. So empty rates relief, topic that's usually at the forefront of everybody's mind, particularly when it comes to serviced offices, because there are multiple changes in occupation. So in England, there's a full exemption on rates for 3 months for offices and retail when a property becomes empty. So when a suite becomes empty, you'll get 3 months relief. On industrial properties, it's the same, but it's for 6 months. And properties need to be occupied for a period of 42 days to then be able to claim another period of empty rates relief. And we'll talk a little bit more about TPOs, what we call empty rates mitigation schemes, third-party occupations, in due course. Wales follows the same pattern. However, from the 1st of April 2022, this is going to change, and actually it's going to be more in line with the Scottish system, where it actually needs to be occupied for 6 months before you're eligible to reapply for empty rates relief. Scotland, there's a 50% exemption for 3 months, and then 10% relief going forward for the rest of the vacant period, however long that is. However, properties need to be reoccupied for 6 months before becoming vacant again to then be able to be eligible for a further exemption. Small business rates relief, this is really key for a serviced office operator. So whilst the serviced office operators are responsible for a lot of the business rates costs on the property, there is a way to reduce that cost by seeing whether the party in occupation, your client, is eligible for small business rates relief. So in England, that is a property with a rateable value of less than 15,000. So that will relate to the specific suite. And if the business only uses one property, you may be able to get additional relief if you use more, but there are lots of very, very tight criteria. And also just to point out that you can actually not pay any rates if the small business has one property and a rateable value between £12,000 and £1 up to 15,000. If the rateable value, sorry, wrong way around, 0 up to 12,000. If the rateable value is over 12,000 and under 15,000, it's tapered relief. I did say this was a complicated subject. Scotland, the small business bonus scheme, relatively similar. You can get relief if you have a combined rateable value of all your properties of £35,000 or less, and the rateable value of each individual property is 18,000 or less, or the property is actively occupied. Not the most straightforward. Again, happy to look at individual situations and advise if you would like us to. And finally, Wales. Again, most properties actually with a rateable value of £6,000 or under are eligible for 100% relief. However, there is some kind of tapered relief, and from memory, there are some kind of restrictions as to the number of properties that you have to occupy in each billing authority. You can't go over a certain number of properties. So again, it's worth asking the question to take advice. A few other types of relief that you may want to be aware of. Charitable rate relief is a situation where registered charities are eligible for 80% relief, so they only pay 20%. If you're in an enterprise zone, and it depends on the situation, but there may well be relief that you're eligible for, and it says that it's up to £55,000 of relief over 5 years. Again, depends on the individual enterprise zone and what the allowance is. Exempting buildings and empty buildings relief. Yes, vacant listed buildings, again, a question that somebody's asked. Vacant listed buildings, you do not pay any rates. That's, to my knowledge, is across all of the countries. And hardship relief, probably not eligible in this situation. But again, if you've got a client that's really struggling, you need to be able to prove certain criteria, but they may well be eligible for hardship relief. So it's certainly worth asking the question. A different side to the advice that we give to people is rate audit and cost mitigation opportunities. So just a few opportunities that we personally offer to our clients, and lots of different companies do this. Small business rates relief. So again, as we talked about, where your tenants, your clients may be eligible for small business rates relief, depending on the situation. We also audit an awful lot of historic and current rates bills to see where there are opportunities. We have tens of situations that we look at using different legislation, and there have been multiple times when we've found issues in bills where they are simply incorrect and being able to claw money back for people. Always worth having a look at. And again, empty rates relief, 3-month exemption. But then what if the property is going to be empty for a longer period of time? What if, worst case scenario, you can't let that space? What do you do about the empty rates liability? So we do a service called empty rates mitigation, where we basically agree a short-term license with a third-party supplier that we use. Different companies use different people, but this has been tested in the market. It's gone all the way to high courts. It is very well recognised as an empty rates mitigation scheme. However, we have to demonstrate genuine occupation. So what we do is we use a device, like a laptop-sized device, to put into the property, and that is classed as genuine mitigation. As I said, it's been tested in the High Courts. We liaise with the local authorities to demonstrate on a license agreement that it's genuine occupation. And then if the property is occupied by the device for 42 days or more, we then are able to reapply for the empty rates relief again. We then inform the billing authority that it's become vacant at the end of that period, and then you can then get the 3 months empty rates relief. The benefit for the business is that it's a small device. It doesn't stand in the way of doing viewings, showing people around the suite, trying to continue to market the suite. It's there sitting quietly in the background, and it means that it mitigates your rates liability. In an office portfolio, if it's going to be vacant for, worst case scenario, a year, we should be able to mitigate between 65 and 70% of the rates liability during that period for you. And again, that's what we call a third-party occupation. So we're putting an actual third party in occupation under a flexible license agreement, and it's used specifically to remove that empty rates liability whilst showing genuine occupation. And then I think just one more thing from me, which is Section 44A relief. So this is an example, as you can see, a picture of an empty office suite. Now, actually, it's not meant for empty office suites. It's meant for partially empty office suites. So if you have a large space where it is partially empty, and this is why it was brought in by the government, we are able to demonstrate that part of the space is not being used. And basically, we apportion the assessment to be able to calculate which part is not being used, and therefore get 100% empty rates relief on that space. And again, you can reapply for it under a different program. So if you move equipment in and out, keep changing things around, you can reapply for it. Again, depends on the situation. And I think that's it. Thank you very much for your time. Happy to take any questions.
Okay, thank you very much, Hilary. You packed a lot in there. So we have had one question came in while she was speaking, so perhaps we can just pick that one up first. I mean, we've got a few others that came in before. So the question, whose obligation is it to ensure the council have up-to-date occupier information? Does the ratepayer have a legal obligation?
There's no legal obligation, but ultimately, whoever is paying the rates, you would think would want to be responsible for informing the billing authority as to changes. Now, again, it's something that we advise people on, because ultimately we work on the premise that we're trying to reduce people's rates liability as much as possible. So we can advise on the best way to create that situation. And believe it or not, it's not always a case of splitting all the assessments and making sure that everything in the rating list is absolutely spot on. So we can advise on that sort of thing. Yes, it's quite frequent. It's quite normal for ratepayers to inform the billing authority of changes, but it depends who is actually the ratepayer and what you're trying to achieve out of it.
Okay, and then another on one of your sort of latter slides. Does the S44A relief section work with the open co-working spaces, e.g. an area with banks of desks but only a few rented?
I think you would have to be able to apportion the space off. So you would have to be able to demonstrate that, yes, it's a co-working space, but only that part of it is being used. So when Section 44A first came about, it actually came about because of industrial units. And we had to be able to demonstrate that part of it could not be used. So you would have to find a way to literally segregate that space off. So you would have to find a way to tape it off or, put partitions up. But again, it's something worth having a conversation about.
Okay, so looking at some of the questions that came in advance. Now there was one which I know has come from someone in Scotland, and you touched on listed buildings. They were asking whether listed buildings could get business rates relief if the offices are unoccupied but are
Yeah.
furnished, and if so, how long can the business rates relief be claimed for?
So, listed building exemption, my understanding is once it's vacant, it's vacant, and it's for as long as it's vacant for. I will double check that and come back to you, but my understanding is that it's for as long as it is vacant. So you should be able to get that on an ongoing basis.
Okay, I think we're going to hit a record on the number of questions submitted in one of these webinars because we don't normally get a huge number, but they're really rolling in. Uh, so you mentioned the assessor information form, and
Yes.
it says I think you referenced to Scotland. If I get one in England, is your advice to definitely fill them in and not ignore them?
Yes, they do need to be filled in. My advice a couple of years ago would have been quite different. But unfortunately, now the Valuation Office are sending out penalty fines for information that's not completed. So they do need to be completed. However, I would again say it's worth contacting the Valuation Office to have a discussion with them about it, because ultimately, as a serviced office operator, you should only be filling in one form per building as the legal tenant. So if they're sending you multiple forms for different suites, it's worth having a conversation with them about it.
Okay. And there's more. They're just going to keep coming. I'm afraid, Hilary. Uh,
Okay.
if an office has no occupier but is left furnished to assist finding an occupier, is it eligible for empty rates?
This is an interesting one because certain local authorities have started clamping down on this now. So, City of London, as an example, have started saying if it's furnished, it's not eligible for empty rates relief. We have taken council's opinion and we've looked at the legislation and we believe that they are fundamentally wrong. So it is an issue. It's an ongoing issue. We are hoping to take a case to court to see if we are successful. In the meantime, we are advising people that if you receive a bill from a billing authority that does not agree that furnished should be eligible for empty rates relief, continue to pay the bill. And I think that's probably a very good point for most people. The billing authorities are very, very hot with bailiffs. If you are being sent a bill and you are not sure about it, please continue to pay the bill whilst you get advice, because otherwise you will end up in a very, very sticky situation.
Okay, that sounds quite important advice there. Um, when applying for SBRR on behalf of a client, each authority seems to have a different process, and often weeks, if not months, goes by without any communication or confirmation. Are the
Yeah.
authorities obligated to backdate the relief to the initial application?
Yes, they can do that. I mean, if you've provided the right information with the dates, then there's no reason they can't do it. At the moment, they've moved an awful lot of people off to dealing with grants, so COVID grants and COVID reliefs. So they are incredibly behind, and we often can't get hold of them by any method other than email. So, yes, as long as you've submitted the information, feel free to constantly chase it up because they will need the chases. But yes, they will deal with the dates that you have provided.
I think that's a common problem across public bodies at the moment, isn't
Yeah,
it? Still
it is.
in that catch-up mode. How do you apply for S44A relief? It's a nice brief question.
Yeah, so it's a local authority relief. So again, you have to write to them, and you have to. They basically arrange an inspection, and they arrange for somebody to come round, and you can demonstrate to them that the space is not used. They can turn up at any time, so I would say please don't use the space. Make sure that it is definitely not being used and it's partitioned off. So if it's an office suite, make sure that the door is locked. If it's part of a suite, make sure it's partitioned off. There is legislation that you need to use to be able to get that over the line, but the first point of contact is the billing authority. I would contact them and say, how do we apply for it?
And the rates are assessed in our licensee's name, but we pay them and the council are refusing to make refunds to us. Is this correct?
That is a very tricky one because, strictly speaking, if the bills are in the names of your clients, then the refunds should go to them. However, you can demonstrate that you've got a license agreement which shows that you are responsible for all the costs. So again, it's worth taking advice on that. It's a common problem that we have. In 99% of the cases, we manage to find a way around it.
And where we get VOA requests, we email the VOA and say it's a service to office, and they cancel the request. I think that's a straightforward comment there.
Yeah.
And okay, slightly longer question, but I will read it out because it's probably makes it easier for everybody if not able to see small screens so clearly. We were advised by the local authority that we could not access the historical grants that were aimed at hospitality, despite the fact that our meeting rooms have an in-person catering service, which is fundamental to the product. Can this be challenged and retrospectively paid out?
I'm going to ask whoever sent that question to send me an email because we have a specific team that are dealing with the grants, and there are very specific criteria from each local authority as to the situation where they will give the allowance and where they won't. So I will probably need a bit more information about where the property is based and a bit of historic information so I can understand the situation to be able to advise on that. That's okay.
Okay, thank you, Hilary. And if that person wants to send that to the Flexa team in the first instance, we can pass that on if that's easier because they'll have our email address. Really assess the information forms. I understand your advice that we need to complete. In your example, you talked about quoting the rent we pay to the landlord. What is your advice when we own the building? I.e., do we suggest a notional market rate?
No. If you own the building, then you send it back and you say that you are the freeholder, and that should be the end of it. It's not the ratepayer's responsibility to set a level, it's the assessor's responsibility.
Okay, that was very clear cut. Can council tailgate at the property for inspection, or do they have to arrange a specific date and time to inspect an office or suite?
From my experience, as they are a division of HMRC, they are entitled to come around whenever they want to. And they do sometimes. You would hope out of courtesy they would arrange a time to come round, but strictly speaking, they can turn up whenever they want to.
Okay. So going back to some of the questions that we had in advance, is there anything I need to do in preparation for the next revaluation?
Yeah, I think that probably the main thing to do is to gather any evidence that you've got of what was going on in your market at or around the valuation date. So obviously in England, that's 1st of April 2021. Scotland, it's 1st of April 2022. And in Northern Ireland, that is going to be October 2021. Have a look. Please keep a note of any transactions that were happening around that date. And when I say transactions, I don't mean license agreements. I mean, if it's, say, for example, you did a lease renewal or a rent review or a new acquisition, please keep that information because that is absolutely key as to how your property is valued. Once you've got that information, you can then decide whether or not when the draft list comes out, whether or not you think that there's a case to be had, so you can compare it. Bearing in mind, the rateable value that comes out is supposed to mirror the level of rent that you're paying around the valuation dates. The other thing I would say is, it's really important to get your ducks in a row. So if you are going to be taking rating advice, I would say to everybody, please get somebody instructed sooner rather than later, because these lists, like never before, need a huge amount of work done up front to protect your position.
Okay. And are there proposed changes to the systems for the revaluation?
Yes, so I think I've actually covered that, Jane. So actually, the main changes are Scotland. I mean, the only other major change really that's going to happen in England is what's called the duty to notify. So again, it's the government putting more pressure back on the ratepayer to be able to do the valuation effectively. So what this means is it means that if you've had a lease event, such as a lease renewal or a rent review or an acquisition or a disposal, you will have 1 month from the date of completion to notify both the valuation office and the billing authority of that change. You'll also have to do an annual return bit more like an accountancy process. And that is coming in over the course of the next rating list, over the course of the next 3 years. We don't have any more details yet.
Okay. Just a couple more now. Is there any rate relief when completing refurbishment work within flexible workspace? I think that might be one again you kind of picked up along the way, but just for
Yeah,
clarity.
so yeah, of course. So if it's empty, you can apply for 3 months empty rates relief. If it's being stripped back to a shell, and I mean literally stripped back to a shell, you can apply to get it deleted from the rating list using certain legislation.
Okay, and then as a final question, serviced officers have a lot of changes in their occupation. Is it essential that the local authorities are kept up to date?
Not necessarily. So again, worth taking advice. So it depends on the situation. It depends, what in whose benefit is it to have each suite individually assessed. So it might be if you've got a lot of individual rateable values that are under the small business rates relief threshold, and you've got a lot of occupiers, clients that are individual businesses, may well be beneficial to get each one separately assessed. If you haven't, situation might be different. It's worth looking at each case individually.
Okay, thank you very much, Hilary. You've packed an enormous amount of information into the last half hour or so, and I'm sure everyone is leaving a lot better educated on this subject and hopefully with some really helpful tips to take back into their own business. So thank you very much for that. Colliers details are on our website as one of our member companies, and I'm sure very easily findable themselves as a website. So this is the last at the moment of our planned Workspace Wisdom webinars, but we're really keen to organise some more. If anyone's got any thoughts on topics they particularly like to see covered that are practical information for people running Workspace, do let me know. And also if you've got any thoughts on who can deliver that information. What we have got scheduled to come up is the Flexible Space Association Conference and Exhibition, which is on Tuesday the 10th of May in London. And the focus of that this year is environmental sustainability and well-being matters. All the information on that is available on our website, and there are special rates for tickets for our members, but also it's good value tickets for everybody. So it'd be really good to bring together again a large portion of the flexible workspace community for that conference. So that's all from me. Thank you very much again to Hilary, and we look out for details of webinars in the future. So thank you very much. Bye-bye.
Thanks for your time, everyone.